Okay. We're still figuring out how to roll those intro graphics. Matt, we have a very special guest with us here today, don't we? This is Dustin Gouker. We've never spoken before, so we'll give you a second to introduce yourself. I saw in your bio that you're calling from Oregon. I'm originally from Oregon. Matt lived
Went to
for
the
many.
University of Oregon. Yep. Go Ducks.
So let's go. And I'll confess, Matt, when I first encountered Dustin's tweets, I kind of thought this was, the villain of the prediction market type stuff, right? Certainly, interpreted him as a bit of a critic, but I've come to appreciate his takes, which are maybe more pragmatic than a lot of the over-the-top, change the world rhetoric that we have on our Twitter feeds. Matt, we were talking about maybe Dustin is the only adult in the room.
Yes, definitely. I mean, Dustin, when seeing some of Dustin's tweets, Josiah and I would have a lot of conversations outside, and I'm actually very aligned with a lot of the things that he's saying. So, Dustin, I'm going to give a quick intro for you and let me know if I'm missing anything or if I got anything wrong. But Dustin Gouker is a writer and creator for Event Horizon, a prediction markets focused newsletter, as well as The Closing Line, a newsletter about the U.S. gambling industry. Both of them also have their own respective podcasts. So definitely feel free to take a listen. Dustin, welcome on the show.
Yeah, thanks for having me. I want to clear this up. I don't hate prediction markets. I hate a lot of the nonsense around them. I hate that we can't I wrote about this today, that we can't have an honest conversation about whether this is gambling or not. I hate that this is happening in a way that nobody really thought about, that we're just like, Kalshi decides to self-certify some markets and we have sports betting all of a sudden. That's what I don't like. I actually kind of like prediction markets. I like that people can go and bet and not get limited. It's just the how and the why, I guess. I don't know. Maybe that's not the right word. That's what I don't love about what's happening right now in prediction markets. But I'm not like totally against prediction markets existing, just to clear the air for anybody who thinks I just hate prediction markets.
Yeah, good. Okay, we want to get into it with you. We want to talk about some of this week's headlines. We also want to get your predictions about prediction markets, right, as kind of an industry analyst. And we'd love to hear more of your background. Maybe to kick things off, though, I think the tweet that we thought presented your case from this week, or maybe not your case, but a good one, a banger, if you will. Well, it's already here. Was every time a prediction market raises money, you have to read nonsense like civilization scale truth-telling machine. I LOL'd. I truly LOL'd when this one came across my feed because it was fully, sandwiched between tweets celebrating volume market TFTC announcement, the Kalshi raise. I think Kalshi now has crowned themselves the first decacorn, or the decacorn, I think is the phrase, since it's a $11 billion valuation. Fanatics launching their own prediction market. And so, yeah, kind of all of the hype videos, montages of rocket ships taking off and, up or down. So then this tweet being the next one on my feed was a pretty funny.
To be clear, this is also a real thing I saw. I'm just subtweeting somebody who I saw this actual phrase on Twitter from somebody. So I could have made it up and it would have been pretty funny, but it's a real thing. This is like, but it's like, so it's really what, again, I'm also somewhere in the camp between prediction markets are going to change the world and prediction markets are like the devil incarnate. There's a fine middle ground in there where I exist. So like, it's just like, I get it. Like I like, there's a lot of stuff I love about prediction markets, like, especially as I've covered it over the past year and learned more about it. Like, it's really like things like the government shutdown, to me, that was really cool to like be able to price that. Like, otherwise you're just listening to talking heads on CNN or wherever else saying the government might shut down, but we have pricing on that. Like, we have a probability of that actually happening, and then a probability of how long it would happen. Those are super interesting use cases in the real world and really great use cases of prediction markets. So, but it's also something short of, like, I think this, life-changing tech and exchanges like that's going to shape reality. I don't think it's that. I think it's really interesting and really important, but I think it's a little less. I think it's a little oversold in the world, especially from the VCs who are behind Kalshi and Polymarket.
Definitely. And Dustin, I'm actually curious. Can you remember like the first time you got exposed to like prediction markets, and was it in the context of like sports and like gambling, what you like typically cover? I'm curious to hear like when your exposure was to that, because I think a lot of what you're saying resonates with me as well. Where at the beginning, there's like, it's kind of like an interesting experiment. It's like, oh, it's, you know, a lot of it was like political based. There's a lot of interesting markets there, but now it's kind of blown up into covering everything. And there's even phrases saying like gamble on anything, bet on anything. And I'm curious to hear from your perspective, like when your first exposure to this was, and what your like initial reaction was when first seeing it.
This actually is a great way to segue into how I got here too. So I'll tell you the story, a little bit of the story. Longtime journalist, ran my college paper, worked at the Washington Post, kicked around newspapers, ended up here in Oregon in Bend where I live. I worked for the newspaper here, decided I need to get the F out of newspapers because that's a terrible business to be in and still is. Got a call from somebody I worked with at one point, said, hey, I'm starting up this website about daily fantasy sports, DraftKings and FanDuel, like early 2015. Was getting those, they were getting really big, like 10 years ago exactly. Stowe helped like build up a site called Legal Sports Report, which became kind of my entry into all of this and how I kind of got a name for myself. I was covering FanDuel and DraftKings every day, kind of like I'm doing now with Kalshi and Poly Market and prediction markets, help build sites. That there's a startup got acquired by a large media and affiliate company. I worked there, kept getting kicked upstairs to I got to VP level. But in the middle of that, I had some sites that ranked for presidential election odds and betting on presidential elections, and we had to we're doing affiliate marketing for mostly sports books and fantasy sports, but come across Predicted, right? Predicted early, like, and this is probably 2016. And then 2022, but we were sending leads to Predicted at that time with the sites that I had. So I knew about prediction markets, you know, a decade ago, and very familiar with Predicted and what they were doing and all of that. And then, you know, I don't think I'd really thought about it for forever until I saw the news around, you know, Kalshi winning the court case and about election betting and being able to do that. And I'm like, okay, that's interesting. And obviously I pay attention to politics. I went to school to go into I went to school for political communication. So I was like really interested in that. And then, you know, all of a sudden, obviously we start didn't really have a huge intersection with what I did in gambling, but then obviously we see sports betting and self-certification by crypto.com and then Kalshi around that. And, you know, I was already doing a newsletter. Like people were kicking around the idea of doing newsletters. I'm like, well, I guess I'll just do a newsletter about this and see what happens. And, yeah. So again, I think I still think prediction markets are super interesting and super, super valuable to the world. I just don't love that Kalshi is 90% sports betting. Polymarket far less than that, more like half and half. I'm not sure I've kept up with their ratio, but like it can be super interesting and super valuable, but also this is just sports betting at the end of the day. Most of the people who are betting into Kalshi markets, again, mostly at Robinhood, we presume, to a large extent, into market makers than at Kalshi. That's just sports betting. And, you know, that's like cool. People can bet on sports anywhere they want in the United States now, but is that like truth altering civilization scale markets?
Right.
Not really. It's sports betting.
Matt and I have had this debate even amongst ourselves. And I do think on the corners of Twitter that we're lurking, certainly the points that you're making, I think, are understated because there's so much hype and it's just hype, I think, around these markets right now. Did you, Dustin, catch Tarek on the Odd Lots pod?
I did. I listened to that, and then seeing he was on there. There's been a lot of prediction markets on Odd Lots.
Yeah, if folks haven't, let me just play one clip from it because I would love to hear your response to this. And Matt and I have talked a little bit about this precise moment. See if this works here.
So you go into all these different questions, but like, to me, gambling is sort of like you create an artificial risk and then you roll a dice and then you gamble on it, you know. But trading on whether Brexit happened or not, that's just like a natural risk that's sort of there. And then the second question is that, and to me, the even more important one is like the market-based mechanism versus sort of like you walk into a casino, the odds are like structurally stacked against you. Mm-hmm. And actually, if you start making money, they like in the best case scenario, they basically, you know, stop you from participating, and that happens in sportsbooks and others. Yeah. In the worst case scenario, they like kneecap you, right? Like and so that to me is gambling. Like it's like the revenue of the company is equal to the losses of its customer and vice versa. And I just don't think this is the same here. Like that's not how the New York Stock Exchange makes its money. It makes its money based on fees. Same with Robinhood. Same with same with Kalshi. And so I think there's a big structural difference.
Well, this was
so he talks about the structural difference there in terms of like the business model, I guess, of the platform on which a person is trading or gambling, depending on someone's perspective. But what I thought was more interesting was his point at the very beginning, because I hadn't thought about this, and you probably have, Dustin, where he kind of said like the distinction in his mind is this difference between a environment of artificial risk that people would be betting or trading on versus a existing risk surface, like, will Israel invade, XYZ, or will, what's happening with Russia, Ukraine, what's happening with the presidential election. It's like the event already exists, and now we are pricing the odds for that event versus, okay, let's completely invent a risk surface by rolling a die or by spinning a wheel and bet on that. I actually, when I saw this, was like, that seems like a pretty nice definition to me. Like, there's a pretty clean, I can grok, you are gambling on a real world event versus you are building a event just to gamble on. Is that a good distinction in your mind?
It's a distinction that has some merit, I think. But again, most of what we're doing is sports. Sports is an event that exists, right? Like that's like whether we're betting on it or not, it's an event, and we're still betting on it. I think I've parsed a lot of what Kalshi has said because it's kind of my job, and like listening to, like they do seem to make this they try to make this distinction between gambling and betting, that there is a meaningful difference. There sometimes is legally between gambling and betting. To you and me, like I use, like in my everyday life, I'm using those two things interchangeably. Like, I don't know about you guys. Like, I don't see a difference between gambling and betting. You are gambling or betting on an uncertain outcome of something. That is that is what gambling and betting are. It's not like you can layer on nuance to it all you want, I guess. And again, I get that. Like, artificial risk is definitely something. Like, when you go to a casino, you're creating artificial risk. I kind of get that argument, but I just reject that there's something different about how Kalshi operates, and that they make this big, huge distinction about they're not the house. Totally agree. They're not the house. But that doesn't make the underlying activity of what you are doing not betting or not gambling. If you and I like want to play, like I say, hey, Matt, you want to bet on Lions Cowboys tonight? That's betting. It's not, we're peer to peer. It's the same thing that's happening on Kalshi. It's not, doesn't make it not betting.
Right.
It's still betting. So some of this is like trying to create this higher, I get why they're doing this from PR's perspective, try to layer on things to do that. But the underlying activity is still betting. Now, whether it's legal or not betting or not, that's up to the courts and what everything that's going to happen in the CFTC. But it doesn't change the fact that what you're doing is betting against other people. And if you want to make a distinction between gambling and create this difference between gambling and betting, I understand that too. And maybe sports betting should just be open like this and being able to trade. Who am I to say? But I still think it's artificially trying to create this distinction between gambling and betting and trading that isn't meaningful. It's still betting at the end of the day.
Definitely. I would say, just sorry, 1 second before I'll jump in real quick. But yeah, like there was one episode that Desai and I had where we had this discussion, and I went on like a 40-minute like rant, kind of discussing exactly what you were saying, where it's like to the consumer, it's you are risking some capital on some uncertain outcome. And, the same principles apply, whether it's like investing in stocks or like betting on a game, where it's like there's risks that you're taking, there's bankroll management that needs to be considered, like there's dangers and stuff that could come from it. And so for me, I was always kind of confused, like especially when looking at the space of like what is very scary about the G word of gambling. And it's something that like I've always been curious about. And I guess that to follow up with that question, is there a reason why like everyone's super worried about it? Like in terms of like saying this is gambling or not? I guess it's the legal aspect of it, and that's something Josiah and I have talked about, and like that distinction, and they want to avoid. But yeah, I'm curious to hear if you think it's that or if there's more to it.
I don't know, because early days, and like I'm gonna say early days, like 6 months ago, like Kalshi was like actively betting, like saying this is sports betting, right? They're advertising it on Meta. Like I've documented this all very well. They still do from time to time refer to as betting. There is. I don't think legal is looking at every single advertisement or thing they do, but they were definitely marketing it as sports betting at some point in time. It is 100% legal, I think. And just like, if you just walked around saying, you know what, this is sports betting, which is legal sports betting, that's probably problematic from them from both an optics and a legal standpoint. Maybe less so from legal, because I think the hay's in the barn on that. Again, they've marketed themselves as betting and not gambling, but sports betting multiple times. It's not like it was like a one-off where they did it one time. They were doing it all the time, like not all the time, but like regularly in advertisements. I've written like 3 different pieces about all the times they referred to themselves as a betting platform. And again, that goes back to like Tarek and others trying to make this distinction between gambling and betting. That betting is like what we do all the time. Like anything you do is betting, right? and I'll flip this a little bit on its head. Like people who are prediction markets apologists or like love prediction markets, right? They like, this is just another form of trading. Like, why should this be treated any different? And I actually flip that on its head, and I'm like, what is going on at Robinhood with people trading stocks and crypto? That is also gambling. People understand Robinhood to be a gambling app, right? Like a lot of people do. It's morphing into obviously absolutely more than that, to a banking app and to a place where like you do a lot of financial transactions. But like the fact that we haven't considered trading on stocks and crypto and all that stuff not gambling, again, maybe it's legal gambling, but should we just like dismiss that and say like there's no risk there because it's trading? You're just trading, you're investing. Like that, I reject that. Maybe the whole lesson of this is that everything should be, there's some risk for everybody here, right? From a, just telling people, oh, it's because it's stocks, it's fine. No, maybe not. Maybe we should be taking some care to tell people when they're trading these that there's a lot of risk here for you and your money and your bank account and all of that. So I like. That's the argument I hear more than anything is like, okay, why is this any different? This is just another way of the trade. I'm like, okay, great. We should definitely be taking more care with these people and like responsible risk trading, whatever you want to call it. Kalshi does have it. It's buried in their UX UI, but we should be doing that. We should it shouldn't just be like everybody loses money and cool. Like we should let people like have a little bit of power, control, or like just, we shouldn't just ignore that, I think, in the world. And then again, that's a little bit of the zeitgeist of prediction markets that we're just saying, oh, it's like everything else. No, it's maybe we should flip that on its head a little bit and think about this in a different way and just not dismiss it as everything's trading, right?
Yeah. So one of the things that we try to do, this will be a little bit of agreeing with you, a little bit of countering. One of the things we try to do on Three Markets, though, I think, is to, do market analysis, either by bringing on an existing trader or by kind of conducting our own analysis, looking at different data sources, thinking through a market. Matt is super into the, what's it called, Matt? The Bayesian modeling.
Just general Bayesian statistics and like probability.
Bayesian statistics. And I think what we're trying in part to do is to, educate an audience on how to approach these markets with some sort of strategy, such that you're not just rolling the dice and thinking, oh, this is my favorite team, or this team feels good, or et cetera. And so I almost think like you can approach these platforms, including, traditional equity markets or options markets on Robinhood, as a gambler, where you're just, you are just gambling. You can roll the dice. You can just log in, click buttons and make money or lose money. Or though you can have an edge. And I do think there's a distinction then between a casino game where no edge can exist, although sometimes it does, right? But if we're just playing dice, there's almost no way for me to have an edge in the game. And I guess I do feel strongly that predictive edge is a thing and that people can get better at this. Now, are most of the fish on Kalshi, thinking about it that way? Probably not.
Look, I'm actually not going to argue with you at all. You're totally right. There are definitely people who I would say are really not gambling, at least in, over a large enough sample size that they have an edge. The guy who does the mention markets. The guy's obviously a savant. Like he knows what he's doing. He has an edge, right? No doubt. Domer has an edge. Domer is not gambling. Sometimes he's gambling. 50 pence, not gambling. Yeah, he's gambling too. But like most of the time they're not. Over a large enough sample size, these guys have an edge, right? They are doing something that gives them an edge. Or Gate and D, right? I know all this. I feel like I follow all these people on Twitter, and they're all interesting characters. But like they have an edge. I'm not going to argue with that. Guess what? In sports betting, there are people who have an edge. It's still called sports betting. And they're going to lose sometimes. They're going to win sometimes. But there's definitely people. And again, the people who are making markets on this, like Susquehanna, like definitely have an edge on average Yahoos betting into that from Robinhood or Kalshi, whoever's doing the taking there. So again, I don't argue with that. There's in every type of gambling, there is a spectrum of people who are taking part in it. It's no different for prediction markets. You can argue that there's more of an edge. There's more information, more data. You can definitely there's ways to have more of an edge. But yes, like I don't know what the percentage of people who are just like, I like the Lions. I think I'm gonna I like their team. I cheer for them. I just want to have a bet on them. That's just betting, right? And there's anything like you mentioned, dice. Craps is probably a terrible example, but like there's actually skill in a lot of casino games too, which kind of gets ignored, right? Like you can play blackjack, and if I just randomly hit or stood, like with not thinking about the outcomes at all. Like that's like, you can do that. Like you can go gamble and do it that way. That's a terrible idea. But some people have no idea of the strategy of blackjack and actually do something that approximates that. But then there's people who know, like, who can count cards and not give it up, and also know, I mean, I know optimal strategy without counting cards. Like that's like, seems pretty basic, but not everybody does that. But so the idea is that there's some amount of skill in lots of forms of gambling, I think, and that doesn't make it not gambling. It doesn't make a game skill. Again, like thinking back to my past, like daily fantasy sports was 10 years ago was like, I actually feel kind of dumb about it now, like, because I'm now on the camp, it's a game of skill. But I was calling that gambling too. There's versions of it now that are definitely gambling. They're just parlays. Like you can, like Prize Picks and Underdog, or you're just putting two players together and saying it's a parlay. It just happens to be fantasy sports. So, but yeah, like there's this delta of skill in everything, every type of gambling, to no skill, to a little bit of skill, to a lot of skill. And prediction markets honestly probably trends toward a lot of skill, right? If you are doing it right, and you guys are smart, I'm sure you have an edge on some things too. Like there's no doubt. Does it make
I did it this morning. We'll get into it later, but a market that we've been looking really closely at is the number one searched on Google thing, which references Google's trend report, which came out earlier or late last night, I think. And I had a pretty high conviction strategy that we've discussed on the pod. Which the end observation, I guess, was that the Pope was underpriced for number one most searched. And this kind of blew up on me a little bit, but we'll talk about that later in the show. I like your framing that it is a spectrum, and also that it just because there can be a skill edge doesn't mean it's not gambling. I think that there's common ground to find there.
Yeah, but I'm not arguing with you. Like when I talk to people, like, and also like I think just Kalshi mostly doesn't like me. Like I think a lot, like I have a good relationship with people at Polymarket. They think I'm kind of funny. They're like, it's not personal. Like I'm just doing what I do. This is what I do. I'm a troll. I'm an internet troll to some extent. But I know some of my stuff, and hell, I'm not even a huge prediction markets expert. I'm an expert on like what's going on in the news. If I tried to I trade a little bit, whatever. I can't bet on college basketball here in Oregon, so I can definitely bet on it at Kalshi, which is great because it's illegal to bet on it at DraftKings here. But yeah, it's I actually like prediction markets. I think maybe like I was so negative at the beginning that people just think I hate it. It's like I don't hate it. I just don't like. I want more out of it before if we're gonna have this in the world.
Yeah, and we definitely really appreciate it too, because I think like in like our discussions like off stream and then at times during stream, it's like a lot of this as well, where it's like, I mean, this is great, it's fun, but I don't want to drink the Kool-Aid fully and think that this is going to be like God's gift to this earth. Like it's a great, experiment. So we'll see how it goes. You actually mentioned earlier a little bit of a pivot, Susquehanna. And I think you had an article on the closing line recently about Robinhood and Susquehanna launching their own prediction market. And we're curious to actually chat with you a little bit more about that. Just I know you had some thoughts and questions around that, or yeah, we're just curious to hear about some of that coverage.
In terms of, for those who don't know, Dustin, his full-time job, correct me if I'm wrong, is, part journalist, part kind of, I would think of you as the industry analyst in the space, in a space where frankly, there aren't many leading industry analysts, in a space that's blowing up. And so last week's news that I think kind of rattled the space was this announcement that Robinhood, who, unless I'm mistaken, had previously said that they weren't exploring being their own book for markets, and they were just going to be a front end for Kalshi, has partnered with Susquehanna, SIG, I believe is the nomenclature, which is the existing market maker partner hedge fund that performs market making operations for Kalshi. So for Kalshi, it feels a little bit like their best friend and their girlfriend are like behind their back right now, launching their own platform. And the takes I saw on Twitter were along the lines of RIP Kalshi. That's it. It's going to be Robinhood versus Polymarket now. I don't know if that's probably an exaggeration, but very curious for your take on this.
Yeah, I try to. I'm in the hot take economy, but I try to step back a little bit. It's unquestionably not good for Kalshi, but there's ways for Kalshi to get out of this. Kalshi is in theory going to launch with Coinbase later this month. They opened up on chain with Solana, having crypto betting and access to tokenization. That's going to be absolutely huge. But like, yes, this is kind of foundational news. I think I agree. Like Robinhood earlier in November had said, yeah, like during their earnings call, yeah, we're not going to buy our own prediction market, designated contract market. We're just going to like be the pass through. And I think everybody kind of believed them. And then 3 weeks later, here we are buying 90% of MIAX derivative, MIAX, I don't know, derivative exchange, Old Ledger X. And now they are the DCM. They are what Kalshi is. Just I presume most of your listeners know, but Robinhood is a futures commission merchant. They are allowed to offer markets through DCMs because of that relationship. So like they can still, and like Robinhood is already offering some forecast X markets alongside Kalshi. They can still offer Kalshi markets in this new world. But like there's a question of like, why would they do that? Because it's more expensive to do that. Susquehanna, like you said, provide standing up a lot of the liquidity on the other side of things. For Kalshi, they're believe the by far the largest market maker at Kalshi. So it's like it seems like very bad news for Kalshi, right? That doesn't mean things can't change. I mean, Kalshi did deals with CNN and CNBC this week, so that's why I'm like, is it RIP Kalshi? It's not good for Kalshi. There's no doubt about that. And again, we understand Robinhood to be 55% of volume on Kalshi of the month. Everybody sees the numbers that are coming through there. Robinhood reported at Q3 earnings that in October they were 2.5 billion volume in October, and we know of course Kalshi's volume turns out to be like 57%, something like that. Like, so that's most of the flow, almost all of the retail flow. It's like there's not very much. That means there's not a whole lot of retail flow at Kalshi proper, right? That there's some market making. There's obviously Kalshi trading. There's Susquehanna, but like if 55% of volume is coming from Robinhood, and you're like that's getting turned off sometime next year, like that's bad, right? And again, on the other side, the market making, if Susquehanna decides, oh, we're only doing this at Robinhood from now on, we're not making markets at Kalshi. I don't know if that's the case or not. I'm this news surface for me as much as with everybody else. But like those two things combined, yes, like your analogy was really good. Like these two things are like seem really bad. It doesn't mean there's not ways to like claw out of this. But like I think in the macro, and I'm going a little far afield here, but like I think Kalshi as a B2C operator is kind of rough, right? They are, again, like the CNN, CNBC deals kind of changed the game a little bit. But like they're going against some heavyweight B2C operators in Polymarket, now Robinhood, now DraftKings and FanDuel sometimes later this year. All these companies are very good at customer acquisition and retention. And like they're still like brand has gotten bigger, but how big is it? And like what's going on in the world and the volumes we see, I think there's got to be some issue with like depositing customers and acquisition and retention, because we should be seeing the numbers kind of like go on a rocket ship if they're really good at all this, if they're crushing all of this stuff. And I don't see that. So yeah, that news is kind of like whenever they launch, that's going to be a fascinating moment. Like, is it a light switch getting flipped that like
right.
all the flow on Kalshi is suddenly at Robinhood? Because that's going to be that's going to be an eye opener for everyone if that's the case. Again, we don't know exactly what's going to happen, but it's hard to imagine a world where Robinhood is like doing meaningfully standing up markets from Kalshi when it owns the DCM and the markets itself.
And there's some weird game theory, I think, to the competition in this space where Kalshi, for instance, spent years petitioning the CFTC and kind of paving the path, I would say, on the regulatory front. And I'm sure spent, millions or tens of millions of dollars in legal fees, and will continue to spend millions or tens of millions of dollars defending prediction markets across all of these different states, whatever, Dustin, I'm sure how many states they're being sued in. It's like more than 25, right?
Oh, being sued, it's like, I want to say 8. We have Connecticut this week, man. Because I like it's like Connecticut happened. I'm like throw another lawsuit on the pile. It's hard. Like it's 8. If I have to double check.
Yeah, I don't know how many lawyers they have in house, but they're gonna need more. But
they don't have very many in house. It's mostly external. They have like a chief legal officer, I think, or a head of legal, and that's kind of, I don't know. They probably have other internal lawyers, but most of this is happening with lawyers who are among the most expensive in the world, doing this for them. But it is funny. Like that's the other part of this is like they're the poster child for this. They're the one who went out on the limb, and everybody's like, I wrote this column like 6 months ago, and it was like, it's actually, I think it was like one of the best things I've written is like, can Kalshi get legal clarity too fast. And we didn't actually get the legal clarity, but we got to a point where everybody's like, well, I guess this isn't going away. I guess we need to do this, right? Like, cause like FanDuel and DraftKings are these behemoths. Like they don't want to risk gambling license. And now they're in. Like if I had to price them getting into this, like 6 months ago, I would have lost my shirt. Like, cause I thought, like, I think the fact that they're both about to launch in either this month or next month is crazy town, from knowing these companies and like how risk averse they are, in the current world. But yeah, it's, I don't know. And like the game theory, that's what I think. It's like you guys talk about game theory of this, like the game theory of the whole thing. That's what I spend a lot of time thinking about. Like, where does this go and what's going on? So.
Yeah, because it feels like the other, the market entrants who are a little bit later than Kalshi, like a Robinhood probably, although obviously they're a very big game in town. But they're almost getting to, coast behind the first mover who's dealing with all of the regulatory stuff and the class action in New York and all of this stuff. And so, yeah, I don't know. I think it's just one of these industries where maybe you don't want to be the first mover, or certainly there's just some disadvantage to being the biggest game in town.
Maybe crypto.com was the first mover, but they were kind of like laid back, and they're getting sued and cease and desist too. But yeah, but Kalshi's the poster child. Like they're taking the brunt of all this and fighting like as a proxy. Like I presume Polymarket will get sued and cease and desist as soon as they start. I mean, they should. Like it's actually interesting they haven't been yet. Part of it's just like it's a fire hose of like good luck keeping up with what's going on. Like Underdog and Prize Picks now have prediction markets. They haven't gotten cease and desists. Like I don't know. It's the game theory of where all this goes. It's like there's so many variables, and like we haven't even gotten to the political side of all this stuff either. So
definitely, yeah. And actually, this might be a good segue. You're mentioning where all this goes. Like, we were curious to hear from your perspective. If there like, one or three. I say three because of the Markets podcast, but like, if there are any like forecasts or predictions that you have with all this of like where we're going. I think you had a quote in one of your podcasts recently of like, are we prepared to have gambling everywhere? It's all gas, no brakes. Where do we see? Yeah, I guess it's a very vague and general question. I'm curious to hear your take.
It's Dustin Gouker's predictions about prediction markets.
It doesn't get any more meta than that, right? Well, it can get more meta than that. Like we have a Polymarket market on whether they launch this year, which I guess is resolved now. Although I know there was some people complaining about that before they went out of beta. Anyway, like the question I always get asked is like, does sports betting survive? And again, it would be great. It would be actually fascinating to have a prediction mark on that. I priced it at like a coin flip, like with everything going on, like Supreme Court, whether it gets this, it's going to get to the Supreme Court. I think there's no doubt. And that's why I kind of downplay anything that's happening, like the Nevada ruling where, Kalshi lost a preliminary injunction. Like, is that a big deal? Because it's going to go to appellate court. And then eventually there's going to be a circuit split. And it's going to get to Supreme Court. Like all of that, like, so what does the Supreme Court do this? People who like their job is to follow the Supreme Court, 50%. Like that's that. Then you have the dynamic of what happens if Trump loses in 2028 and we have a Democratic president, because all of this this is not
loses in 2028.
Well, not Trump. Well, a Republican doesn't win. Sorry.
Right.
But he has a 5% chance, right, of winning in 2028.
The wildest thing is that he is an outcome on the prediction market for it's basically the Trump third term market, and
which is hedging against what I like to say is hedging against the end of democracy. Like if you want to bet on that, then you're betting democracy in the United States is ended. But that so yes, not Trump winning, but a Republican not winning and a Democrat winning the presidency. Like none of what we're seeing today would have happened under a Kamala Harris administration. There's no doubt about that. Right. We might have seen people try, and then we'd have the opposite. We might be having Kalshi suing the CFTC to let them do this. Like maybe that probably would have happened. Like I don't know that for a fact. I don't know if we ever would have gotten there, but like that's a possibility. So like, because the old lawsuit about election betting was under the Biden administration, CFTC. They didn't like it. They had the CFTC had lost the court case to Kalshi in October. Then they abandoned the case because of the Trump administration and they're like obviously not doing anything about any of this. So so a Democrat coming into the presidency has some kind of impact on all of this. Will this be so far along that we can't put the genie back in the bottle? I don't know, but like I think a CFTC that's not under the Trump administration is going to be a wildly different world for prediction markets. That right now I can't understate the CFTC is just like, do what you want. Like, it's open market. We can't tell you not to do this, so go do it. Like, that's the world we live in. And I also like, people think there's going to be regulation under the CFTC. No way, man. There's not getting regulation. It's either everything or nothing. There's not a whole lot of in between on the everything or nothing. And then like, there's still I think elections and everything else, all like 100% chance of survival. That's not going away. It's whether sports survives.
Right.
And then, I mean, who wins at the end of the day? Like, that's impossible. Like, I mean, Polymarket has a lot of brand awareness, even though they're not technically legal, even though you and I know very easy to VPN and use crypto wallets to bet on that here in the United States. But like, it's just hard to see. Like, I think it's a hard world for Kalshi. Like, it doesn't mean they can't do things that will change that outcome. Be it with more brokers. Consider, like, again, being on cable TV 24/7 on CNN, CNBC, that's meaningful. I don't know if that's going to create depositing customers who are going to trade, but it gets them into people's brains, right? Like, that's great free earned media for them, that they're going to be constantly in people's brains about that stuff. So, I mean, I think DraftKings and FanDuel win in the states that they're in. Like, they're going to, like, this is their world. This is their, like, I like to think Kalshi and Polymarket, from where I sit at least, are not even the worst sportsbook from a UX UI perspective. They're terrible from a casual sports fan who wants to bet on sports. Like, this looks like you dropped an app from me from Mars. Like, right. It's not great. It's not a great experience. If you're a day trader, I think yes, you could. It's very intuitive, but like, if you're a sports bettor, you're not getting bonuses. You're not, like, Kalshi has no, like, I use the Kalshi app and I have alerts on. There's no retention cycle other than, hey, bet on this tonight. Like, there's no, the marketing is pay a bunch of people on crypto, again, I think these deals this week, I keep mentioning, they're really impressive deals that they got exclusive deals with two huge TV platforms. But like, it's just this world of B2C is going to be hard. The B2B to me is the super interesting. Whoever wins the share of wallet out there in the world, if you're in as many brokers and as many crypto wallets and as many fantasy apps, anything that has a wallet, like, that's where I think everybody wins, right? Like, because the B2C is expensive and very competitive, but B2B, if you can win that world, really interesting. I think
when you say the B2B, you mean distributing
the markets,
the markets, but not necessarily being the interface yourself. I'm sure you would also be, but it's kind of in the way that Kalshi already has been the Kalshi, the app, and they've also gotten flow from Robinhood. That's what you characterize as B2B. That's interesting.
Yeah, like being the market that underlies other things, and like in the future, like the market's going to be like, I mean, we could have a world where a bunch of different markets are under one roof, right? Like, again, we already seeing a little bit of example of this at Robinhood. Like, will price win? Will breadth of market win? Like, you can put all those things in one roof if you want. You could take Kalshi markets and Poly markets and whatever else and put them in one place as an FCM, or there's lots of different ways this is being done. Underdog as a tech supplier, Fanatics is doing it as an IB. Like, that's, to me, like, whoever can win that game is, like, it's kind of been understated, and I think that's where a lot of this is headed, and that's why it's super interesting that Robinhood wants to own it itself. Like, yes, they could also pass through markets, but if they own the DCM, why do they want to do that? I guess I can't see that, but that's I think it's just a really interesting part of all this. And again, I know if I know nothing else, I know sports betting acquisition, right? In that world, I'm very good at, and I know, and like, it's going to be a beast for like. And I see this as an unregulated state product. Like, I don't have numbers. Nobody really has numbers on this. I mean, Kalshi probably does, like, on where their money is, but like, money is coming from, where volume is coming from. Like, I definitely understand this to be like a California and Texas and Florida, like where places where there's either a monopoly on sports betting or there isn't legal sports betting, because like, it's not a competitive product with a sports book. Like, yes, like, pricing is interesting, right? But like, well, I mean, heck, even we've seen Bloomberg Intelligence did this thing where the pricing at Kalshi is worse. You're getting worse. Like, you're paying more to use Kalshi than you are a sports book right now in a lot of cases. So anyway, like, I just think it's gonna be hard
between the two, right? Is that
right? Yeah, you can argue, but like, that's not, again, not the casual sports bettor doesn't give a shit about price. Now Polymarket versus everything else might be interesting because it's like basically no fees, right? Like Polymarket might be interesting from that standpoint because there is a pretty big disparity on like $100 bet between when you bet on Polymarket versus when you're betting on a sportsbook or Kalshi. That's a pretty big deal if you can like get that into people's brains that you're winning that much more money or losing less money. I don't know either way you want to put it. But yeah, like the B2C world is going to like, especially when it's mostly sports betting, is a hard world to win. If you're like a native existing prediction market and not just sports betting, not to do all the experience of sports betting. Like we know Kalshi hasn't hired a ton of people from the sports world. They started doing that. Polymarket's a little bit more sports coded, at least from the people I know who are working there. They have a little better idea, but like that's still. FanDuel and DraftKings have been at this for 10 years, right? Almost between DFS and sports betting. So.
And then I guess there's these weird flywheels, I think, where it's, it's like a nested marketplace because they need a market of counterparties trading against each other and pricing odds, either for sports or let's say for other maybe more interesting social, cultural, or political events. And then they're doing these partnerships, as you mentioned, with media companies or with the Bloomberg Terminal or CNBC and CNN to place the information. The odds are being produced and are almost a product in themselves that they're able to distribute. And in order for those to be valuable and accurate as a predictive instrument, you need a lot of people trading.
Right.
And I know there's kind of this thought that people might come for sports and stay for other things. And so sports becomes a way to gain some predictive intelligence about other things. It seems like there's a lot of winner takes all dynamics, I guess, going on where, if it's fractured, then none of the markets are all that accurate, either at sports or anything else. And so now it's not that useful to CNN anymore because it's like a $10,000 volume market. The whole thing kind of is craters.
Yeah, two things. Hopefully I'll remember the second thing when I come back to it. I mean, Intercontinental Exchange invested $2 billion in Polymarket at $9 billion valuation. I take them at their word when they say, we don't care about sports. Like, it's a nice customer acquisition funnel for Polymarket and will help them make some revenue in the short term. But like, they see this everything else, right? Everything else about information gathering and distribution as the product, right? And that is super interesting to me. Like, obviously these people, like ICE is very good at what they do. And I take them at their word when they say that. And I think Polymarket and Kalshi to some extent also have this world where like sports betting is a means to an end. Like they like Kalshi is not excited about doing sports betting. It's making them a lot of money, but that was not why they started the company. I have it on pretty good authority. They didn't even think it was going to be that big of a deal. Obviously it has been. But that's the world that we live in. There's also this like super interesting dynamic of does it ever turn on them from a like that information side of things? Like Democrats right now are priced to win the House at midterms, right? We've had a bunch of right-wing people and the Trump administration be like, oh, this is the source of truth, right? They called this election for us. What if we're going through next year and Kalshi and Polymarket are pricing the Democrats to win the House, continue to win, like maybe like be the favorites to win the presidency in 2028? Like, does something turn? I don't know. I'm just putting information out into the world, and people can do with that what they want and try to price how things are going to go. But like, that's an interesting dynamic to me, is like, because part of this is like, again, tacit approval from existing power structure in politics in the United States. What if that changes?
Right.
I don't know. It's super interesting.
Yeah.
Definitely. Yeah, I could totally see the narrative just being shut it down. This doesn't work. We'll go on to the next.
You're telling me you're telling us we're gonna lose. Like I thought you were on our side, right? We're just the truth telling. We're just the truth telling machines.
I know we're getting a little tight on time because we have another guest popping on in a little bit. But to predictably think this through in terms of would a Democratic administration or a Democratic Congress react negatively to prediction markets, and would they suffer from it? My take is almost like the historic precedent is kind of crypto, right? Where Democrats for whatever reason had kind of a negative reaction to crypto, but they then kind of came around, and even in the ending innings of the Kamala campaign, she embraced crypto as a campaign item, and so I almost think that was them basically saying, okay, there's no reason for us to ostracize voters over a thing like this. and I think crypto and prediction markets are both, you know, probably somewhere in the same area of the spectrum of gambling or not gambling. So I almost wonder if they aren't going to wave the white flag on prediction markets because they are already waving the white flag on crypto.
I mean, anything's possible. Like, again, like predicting all of this is hard. Like, what I can tell you is states really don't like this, and it's not a blue-red issue. Like, this is like, you know, at the end of the day, this is impacting gambling, like gambling industries that are pretty big in a lot of places. Like, and that's not a blue-red issue. That is, there's plenty of both blue and red states that have gambling and sports betting that don't love that this is happening. Again, we had the, you know, 30, I think it was 35 attorneys general across the country join with one of the lawsuits saying this is illegal sports betting. What the heck, guys? Let's knock it off. But yeah, like it's like it could be like 3 years hence. It could be like whatever. And the default of Congress is doing nothing, right? Like Congress is not passing a law. Like they could like I think this like the avenue is like a new CFTC with a Democratic commissioner in the chair is going to be like, guys, this is sports betting, can't have this. Not going to happen. So
awesome. Well, Dustin, thank you so much for hopping on, and we really appreciate all of your commentary. Appreciate all the content that you have. We'll be sure to forward this stream over to John Wang as well. Maybe I'll take a peek.
We'll have you back on the pod. Maybe we can get John on as well, and we can.
I haven't talked. The people only talk to me from Kalshi on Twitter. I can't get their comms people to talk to me. The newest comms. They have a new head of comms who's like from a different world that's not prediction markets and gambling. Maybe they'll talk to me now. I don't know.
Yeah.
Like, yeah, when John interacts with me, like, oh, this is Kalshi. Kalshi's saying something to me. This is exciting.
Yeah. Well,
meanwhile, I have a signal chat with Shane. So yeah.
Nice.
There you go. Now we're talking. Yeah. Folks should check out the Closing Line and Event Horizon.
Both on Substack.
Both on Substack and both with their own podcast. And we would love to have you back on, Dustin.
Yeah, anytime.
Awesome. Thank you, Dustin.
Cheers, guys.
Yep.
So for folks just joining us, our next guest is a prediction market trader on Twitter who's built a pretty sophisticated, I think, model for predicting TSA passenger numbers on a weekly basis. And it looks like, what was that beep? Is he here? He's
here. They're here. Adding, well, actually, Mr. Froxter, yeah, sweet, okay.
Your numbers.
Awesome. I think we have you on. Can you hear us?
Yeah, I can hear you. Can you hear me?
Yes, we can hear you. We hear a little bit of an echo in the background.
I was just because I was listening to the podcast, actually.
Nice. Awesome.
Let's go, baby. A pod listener. So yeah, for folks who don't know, and we'll let you give a quick introduction, Mr. Foster, but you basically came across our radar, I think, in response to one of the streams, and in particular, pointed me toward this thread of yours, which was the TSA, number of TSA passengers for November 23rd through 30th. This at the time, of course, was Thanksgiving week. And it caught my attention of like, oh my gosh, this guy's built quite a sophisticated model, and we talked a little bit about it, and we've just been trying to get you back on, learn more about your process, your history with prediction markets. Maybe we can deep dive on this model in particular.
Yeah, and also, well, before we all deep dive into it, I also want to call out maybe a little spoiler for those listening. The prediction that you have of 20 to 22 million nominating, that seemed to be the number. That seemed to be the strike that resolved, I think. So I think you hit that. But yeah. Take it away.
Thankfully, I was able to make some money on that, so it was good.
You're muted, just by the way.
I was gonna say, where did you get in? Where did you get in here?
In the prediction market, you mean?
No, sorry. Into the specifically, I'm looking now at the TSA passengers for November 23 to 30th. So you were probably buying. Were you in the 60s?
No, more like 40s, 46% around there.
Wow. Okay,
yeah,
you're
like
early to the. Yeah. Incredible.
Yeah, like on the for some things. Yeah.
Very nice. Huge return. Sorry, take it away. Take it away, Froxter.
Yeah, I was able to do 70%, something.
Nice. Can you hear us? Testing.
Yeah, I can hear you guys. I'm sorry. I think it's a little bit my end.
Oh, no worries. Yeah. So Feel free to tell us more about how you spotted this market. Maybe what
I can
got
hear you
you
guys. Can
into
you hear
like
me?
analyzing and putting more resources into it. Sometimes it's really tough to like pick a market and like spend some time with it. Did you have maybe you had an edge beforehand? Yeah, just curious to hear both about yourself and then also your story with this market.
Sure. Can you hear me there? I think my computer is better now.
Yeah.
No, we can hear you.
Perfect. So yeah, just a little bit about myself. I do have like a background like in finance, investment banking, Wall Street, and then I am in a crypto venture fund, which I'm not gonna disclose the name, but I do this like as my day hobby, like I love prediction markets. And I was listening to the podcast before I came in with Dustin, and I have to say that I kind of respectfully differ from his opinion. Like I think there's like a lot of analysis that can be done in these markets. And yeah, for this particular market and others that I like to analyze, I try to get into markets that, there's like some data to analyze, like some past trends, like something that you're going to be able to project. And that's where I try to find my edge. I'm trying to stay away from what my perspective a little bit more speculative, like market mention markets or things like that. So yeah, I just like spend time like browsing into Kalshi or Polymarket to see like which market seems like a good candidate for this kind of like framework or analysis.
Right. And a market like this, yeah, you have historical data. I mean, you mentioned in the tweet that for the model you built, you used 3 years comps. So historic, TSA passenger numbers going back 3 years. And I think I saw TSA numbers. I think the TSA numbers are actually published daily. Is that right?
Yes, they're published daily.
Here it is. So this was crazy to me.
Um,
They publish this every single day. So it's to your point in terms of looking for markets where you can have an edge. This is an instance where you have a very rich historic data source. You're able to pull 3 full years in order to build your model. And then it's also one where I think your model can be constantly recalibrating, even as the market, before the market resolves based on the data that's coming in kind of almost in real time. Is that accurate? Oh, did we lose you, Mr. Froxter?
yeah, that's accurate. Like you can add points as the data from TSA.
Yep. Yeah. No, sorry. Keep going.
Yeah, I'm thinking if I try. Do you think that's better?
Sure, you can give that a shot. We'll be here if you want
Yeah,
to.
we'll be here. No problem. We will get Mr. Foxter back in just a second. While he rejoins, Matt, our last guest mentioned Domer's Edge.
Yeah.
You have a chance to watch the 60 Minutes, the 60 Minutes bid on prediction markets?
I actually haven't yet. I was supposed to watch it right before this, but yeah, play the clip.
Here's the 30 seconds that I think are just legendary.
He won $100,000 on the Pope, and even more picking J.D. Vance to be Donald Trump's running mate. He started betting on him 5 months before he was selected, when Polymarket was only giving Vance a 2% chance. What did you see that made you think, oh, he might pick J.D. Vance?
So that goes back to 2016 when he picked Mike Pence. And buried in one of the articles for why he picked Mike Pence is that Mike Pence had a one-syllable name. And Trump has a one-syllable name. And Trump is very into marketing. And so I was looking at the names and I was like, who's one syllable? And not only is Vance one syllable, he's only 2 letters off of Pence.
So you bet $4,000 and you ended up winning $250,000?
Yes. Yeah.
So
look at Anderson Cooper's
It's a one-syllable name. And
when he explains the one syllable.
so I was looking at the names and I was like,
I mean, this needs to be the reaction image of any freaking prediction market strategy. The crazy thing is he's buying Vance at like 2 or 4 cents, and Vance hits, and it's entirely based on. I mean, sometimes these are the marketing interpretation of a VP presidential pick. Just the observation that Trump likes marketing and likes one syllable names, and that Pence and Vance sound similar. May or may not be why Trump actually picked it, but it at least gives Domer conviction to be in that trade. And I think it's a legendary trade. I actually think there is some pattern recognition there of like, Trump does kind of operate this way. I think on some decisions he does.
It's a shame that like the clip is only so short and that he only had so much time to explain his reasoning behind it. But I'm sure, like to any layperson who hears that, they're like, "What? That's just like a guess," But like, there's so much to that I'm sure, like if Domer were to elaborate on, I'm sure he has in other podcasts and stuff too. Like, it'll be like there's a lot more detail there.
We're gonna get him one of these days, bro.
Definitely. I see Mr. Froxer is back, so let me add the mirror 1 second.
All right, I'm sorry for that, guys.
Hey, no worries.
No worries at all. We keep it cash here. Let me pull up your post again. We're talking, for those just joining, about the Poly market prediction markets for the number of TSA passengers on a weekly basis. And our guest, Mr. Froxter, has built a fairly sophisticated model that he's running a Monte Carlo sim on in order to predict the number of weekly passengers, going through TSA. And at least, from the thread we're looking at from Mr. Froxter now, we mentioned actually hit on this market. So the model was pointing to the 20 to 22 million passenger range. That's, the bet that Mr. Froxter took. And then, in fact, for the week of November 23rd through 30th, that is the outcome that occurred. So yeah, share with us a little more about maybe this model in particular. Like if I just pull up this image, for those who haven't done any kind of, data modeling for prediction market trading, what are we even looking at? And what is a Monte Carlo sim?
Yeah, sure. Thank you for that. I guess like the big picture of a Monte Carlo is just like a model like that spits out like a lot of simulations. Like in my case, there were like 10,000 simulations that I choose from. And the way it works is that it tweaks different variables that you feed into the model. So in my case, I calculated the, like the compound annual growth rate from 2022 to 2024 for those days for TSA passengers. And I tweaked that growth rate through the Monte Carlo model and added like some other variables. For example, in that moment, the government shutdown was in place, so the FFA had to like shut down part of like some of the airports. So I also added that variable, and yeah, I run it, and the numbers were there, and I saw a gap, and I decided to place a bet.
Nice, that's awesome. Just saying, muted, by the way.
I'm always freaking muted, aren't I? You basically are using 2024 TSA numbers as your baseline. Like that's your starting heuristic. And then you're layering in like variables onto that prediction, and one of them being the government shutdown and the FAA cut. And when you say FAA cut distribution, I take that to mean you have a range of what the cuts are and how much they're affecting this. And so it's not just it's being cut by this many numbers, right? It's much more, it's an actual range that the model is then going to take into account. Is that right?
Yeah, exactly. At the moment, the announcement was that the aim for them was to, I think, cut like 10% of airspace, but that doesn't happen in just like one moment or one day. So I put like a range between, like 1% and that 10%, and also, like a drag that we'll have like on major airports, because when you are like closing airspace, like 70% of their major airports are going to be like affected. You know what I mean?
Yeah, definitely. And also, maybe taking a step back a little bit, how did you find this market, and like how did you know, like did you already have some understanding about this kind of data before going into it, or was this something that you like stumbled upon being like, hey, you know what, I feel like this can be modeled and I think I could have like some edge if I spent some time on it?
Yeah, no, it's much more on the second one. Like my background, it's in finance. Like I've always like modeled and projected things, and like look at new things or industries or companies and try to translate those into data in Excel. So when I go and look into Polymarket or Kalshi, like kind of instinct or personal filter is to see like, okay, like these can be like modeled out or like at least like analyzed through like a decision tree, or I can like put like some numbers or some logic into this, and that's how I found that. And I started digging up and I saw that there was like a bunch of data for past years, and I was like, yeah, this is a good one for doing this.
Nice. Do you think you would have participated in it like halfway through? So you mentioned like you were able to jump in when it was like 40 cents or something a share for the strike that you were looking at. Would it have been something you considered if it was like, yeah, somewhere between mid-November and stuff, or would you have like moved on to find something else?
Maybe. Like also by mid-November, I think the shutdown ended or something like that, and they decided to like open up like airspace, and that was pretty quick. So if you like take out that from the model, it's even like more skewed to the range that is like between 20 and 22. So probably I will have done it, but probably the edge wouldn't have been there like totally, because people will have like probably also taken it, because people weren't taking it because they were afraid that the government shutdown wasn't going to have like a lot of you know
A larger
like
impact. Yeah.
yeah, exactly. And that's where I saw the gap.
So is there any mispricings by your measure in the December 7th market? Like there's a market for TSA passengers now for the week of December 1st through 7th. So this resolves in just a couple of days here. But the 16 to 18 mil number is a 97.4% lock. Is there any, I don't know if you've run the model on this week's data, but what are your thoughts?
No, I haven't run the model on that one. But I'll look at that. I did one on measles cases for 2026,
Right.
and I saw that that's like pretty mispriced. So I took a bet on that one, and I'm making some money on that one for sure.
That's awesome. And like, you don't have to share exactly what strike you're in, but like,
But please, what strike are you in?
but also like I'm assuming the same principles apply here. Like there's like some data source, like rich, data source that's out there that you're leveraging, maybe applying the similar like forecasting like technique with that, running Monte Carlo simulations to say with each strike what's like the percentage likelihood based off of these simulations. Do I have that right, or do you kind of approach each of these, like, have you been approaching these with different methodologies?
Yeah, no, for this one, I did like one. If you go to my tweets, like there's like a graph in there, but I did something a little bit like different. I projected like the weekly curve or of the cases for the last 12 weeks and go down a little bit. Yeah, that one.
Pulled CDC week by week data and ran a forward model to check how realistic it is for total US measles cases to be above 2,000. What do you mean by a forward model? Matt knows more about this stuff, I think, than I do. I don't even know what that means.
It's just like projecting like in the future. That's basically it. And my trade is like short yes, so go into the nose for the plus 2000s.
Going to the nose
So
2000s.
yeah, so in the first graph, you can see how the weekly cases have been going down. Like there was a curve of like people getting infected, stuff like that. But then like it plateaued and it started like going down. And in the second graph is like a base case model on which like, you have like a burst case, like a base case, and then like a bull case. And I think the first one I added like 5 cases per week, the second one like 20 per week, and the third one like 50 cases per week, which is like a total outbreak. And even if you add like 50 cases per week, it barely breaks the 2000s. So that's where I saw like, yeah, I think people are mispricing this. I don't think it's gonna go plus 2000s.
Nice. That makes a lot of sense. So what you're doing is like, given the historical data and also having some, what it sounds like is like you've plugged in some like heuristics to say like, if we were to see some steady increase or like an outbreak here, or if we were to see like the trends remain the same, then that's kind of what's informing your decision here. Like just like having, I'm not sure if it's heuristic based or if you're using like some other like forecasting methods for this.
No, that's basically it. It's just
Nice.
like more like yeah, trying to approach this from a first principles perspective.
Very
Like
cool.
I think there's more to analyze than what people think on a lot of markets.
Yeah, but that's so powerful because it's like, sometimes when people look at these markets, it's like, I mean, even sometimes I would look at these and consider like, okay, well, if I wanted to do some kind of like hybrid, like Bayesian plus frequentist approach by having like priors of certain events taking place, having that factor into like what will happen in the future, I might be overcomplicating it a little bit versus being, like you said, first principles. It's like, all right, well, if we were to just, if trends stay the same, this is what we would see at the end. If there was what you've defined as an outbreak, this is what we would see, and then running simulations on that. It's really cool.
Yeah, exactly.
Yeah, yeah. The measles cases in the U.S. is an interesting market, in part because there is real utility to this, in part because there were corners of the internet during the COVID outbreak that I think were very deep in the data and were kind of ahead of even the CDC in some cases in terms of how bad the COVID outbreak would be. So I hadn't looked at this market before. It's really interesting, and there's a market for cases in the year 2026. I would almost be curious to run your model on that. And then I saw the resolution criteria for this is the cdc.gov website. So as of yesterday or the day before, the number is 1,828. So you have about a month, Mr. Froxter, right, for us to not have about 172 more cases, right?
Yeah, for me and for the sake of the people, I don't want them to get sick.
Right, for both, I guess, for both.
Yeah, that's right.
Yeah, I guess that'd be interesting if you took the yes on it, and it's just like, all right, go out and I don't know, infect each other.
So yeah, what's fascinating though is like, okay, so for 2026, okay, so for 2025, there have been almost 2,000, and your model is showing, it's likely will stay under that 2,000 number. For 2026, for the entire year, the market is pricing a 41% chance right now of more than 2,000 cases. It almost feels low. I mean, it's almost like I guess you pointed out that these cases are on the decline, and I guess this is a very illiquid market.
Yeah, no, that I agree. I think there's like a mispricing in there because it's illiquid, and I don't know. I think 2026, like at the end of 2026, like so much far in the future that I don't think like people are like taking too seriously that particular market. And people maybe don't want to restrain their capital to see that outcome right now. That's how I'll think about it. Like I try to like trade markets that are like faster in resolution so that I can like recycle the capital faster. Unless there's like like a very big play to make.
Yeah, that makes a ton of sense. I'm curious to hear about some of the motivation of like your effort posts, the long form posts of sharing it. Some people, if they have an edge or if they're like working towards something, they would just keep it to themselves. They would say like, you know what, this is what I got. I don't want to share it with anyone. I'm not going to post at all. And I'm sure we're probably both aligned in that. Like Josiah and I, for example, we'll talk about these things openly, just because it's like fun and we like,
leaking all of our alpha, and so are you.
Yeah, so curious to hear what's like, the motivation behind it, and yeah, like just curious to hear more about that.
Yeah, no, I guess I like to have like skin in the game. Like what I publish is what I trade, and I don't know if it's like giving up alpha because I always publish after I trade. So if people trade because I publish, that's gonna like help my case. So please go and do that if you want. but also like, you know, it kind of like builds trust in an audience. I think because of that, Kalshi reached out to me to give me the badge, and some people have been reaching out to me to like do some kind of like work together. And I think it's cool to like educate, like try to educate like people in this space. Like I think there's a lack of like, you know, quantitative, like serious data driven analysis in the space that I think it's gonna happen. So I'll be like more than happy to like pioneer that. Yeah, just trying to share my thoughts there.
Very cool, and totally agree with that too, because I think it's something that Josiah and I have been like wanting to commit ourselves to in the future. There's been some tools, for example, like guesstimate or other like probabilistic languages to like help just kind of like get a like put some numbers to your intuition as to like, here's what I think about the market, here's like some of the information that I have, here's how it factors into my prediction. Because it's really easy for anyone to get caught up in their own like implicit biases, right? Like, oh, this team's great because they're my favorite, or like, oh, like there's definitely going to be more people flying in Thanksgiving. Like someone could have done that, maybe had some confirmation bias when the bet hits, and then they just kind of fall into those bad habits. So yeah, I don't know where I was going with that point, other than we appreciate you sharing
No,
that.
yeah, no, I agree. Like most of my postmortems when I have been wrong is because I have been like aping into things just because I'm like, yeah, that sounds right. Like this is cool. I'm just gonna go in there. But like I have to remind myself that nah, like that's not the way about it. And when you're like analyzing this way and going through your thought process, like it's pretty revealing. Like, you know, you get to understand things that you weren't thinking before, and it kind of confirms or like negates the theory or the thesis.
Yeah, Matt has pointed that out to me, right? Where I'm like, dude, you know, your intuition has pre-trained on all of your observations and stuff. So I'm like, you know, I gotta trust my gut on these. And he's pointed out that you should then be able to actually enumerate all of the priors that are
Yeah.
informing whatever your intuition is. And if you can't do that, then maybe your intuition really isn't, you know, maybe it's more vibes based than it should be. And so just taking the time to really hammer out like a trade thesis before entering these markets.
And vibes is okay. We just call it Bayesian. You know, once you start adding numbers to it, like actually,
you want to fortify your vibes. Yeah.
Yeah, totally.
Did you, Mr. Foxer, did you trade at all in the Google year in search related markets?
Oh my God, no! But I saw all the drama. No.
Yeah.
Well, this is a good session for us to give feedback to Josiah's his approach, because I think your approach is actually really good, and I think it'd be great to share with folks and also the outcome of it.
Well, thank you for saying it was really good. I don't know if it was that good. For those who don't know, though, we've analyzed these markets. We've covered them quite a lot on the Three Markets pod. And what I had observed, the markets, I'll pull it up really quickly, is most searched, and then we can talk also about the resolution drama.
Also, sorry, Mr. Froxer, I know we didn't give you a heads up to give some feedback to Josiah's analysis, but hopefully that's okay.
No, no worries. I do have my own thoughts, but I'll let you guys run with it.
Oh, nice.
Let me see if I can even find the.
Well, maybe while Josiah's finding it, curious to hear your like first take and thoughts.
Sign off.
And like this is not gonna sound like what people like to hear because people love to trade these markets, but I unfortunately think that, you know, prediction markets can like, you know, break people with incentives like insiders. So as much as I hate to say it, like I try to stay away from markets that can be manipulated in this way. And like we've seen it like more and more. I don't know if you guys saw like a Russian versus Ukraine manipulated market by AWS, like the map guys. That was crazy to me. So it's just something that, you know, take into account when you're gonna like bet, like, okay, like, is there someone that can do something to like, you know, change the outcome of this because there are economical incentive? And if there is, I think you should take that risk variable into your decision.
For sure. It's almost as if there's like an invisible strike there of like some crazy shit happening to the rules of this market.
Well, yeah, there's two different things going on, Matt. Like there are people who are speculating that a Google insider was trading in this market. And I think there's just a lot of people who feel run over by this market. To back up for our audience and just tell them what happened, right? The number one search person on Google this year market, which exists both on Polymarket and on Kalshi, names, you know, a host of potential outcomes for who this could be. And this is up to the editorial board at these respective prediction market platform companies to come up with, the outcome options for who might be the number one most searched person. So we highlighted a full month ago in some of our coverage of this market the fact that it could be that a person who is not on this list is the most searched person. And there's a little bit of a cognitive bias that traders bump into where, we just start to compare historic data or proxy data. We were using Wikipedia page views, for instance, as sort of a proxy data source for how many Google queries these people might be getting. But I too fell victim to kind of putting on blinders and just doing a comparative analysis between all of the names on the list, when in reality, the person who ultimately was the number one most searched person, the title is also problematic, was someone who was not introduced as an outcome on these markets until, in Polymarket's case, a few days before resolution, which was this morning. And in Kalshi's case, I think it was less than 24 hours that this American singer-songwriter David showed up as an option. And people are speculating, why did this person show up as an option? Why did they show up as an option so late? Who was buying that option that late in the game? Yeah. Do you think, Mr. Foster, that there was actually foul play here, or do you just think it's a risky market, where the set of outcomes is not the complete set of outcomes that could exist in the universe?
I want to think that it was the second, but I don't know. It just sounds like very enticing if you have like that power at your fingertips to do it. If you were an insider. But like on that topic, I do think that people like misprice those kind of risks. Like I hear a lot about people like bonding on 95 to 99% markets, saying that it's like totally like risk free. And I've seen people like losing a lot of money because of doing that. So just be careful, like even if a very liquid market, it's like $80 million or $8 million saying that it's 90% something, like maybe it's not.
Yep, totally. I think there's like, to your point, like looking at the market itself being like, can this be manipulated? Is there anyone participating in it? Like, I mentioned this to Josiah before on a few episodes, but like, I love the idea of a lot of these pop culture markets, but so many of them are like, can completely fall victim to like insider trading. I watch a lot of Survivor. There's Survivor markets. That show has aired 4 months before the actual season starts. Why in the world would I even think about participating in something like that? Like on an episode basis, it might help me in my fantasy Survivor league. And if anyone listening to this is in my league, I don't use that for cheating. I promise. Yeah, like it's been tough for me to like participate in a lot of these markets as well for the same reason that you have, where it's like, I don't know, like some of these could flip like at any point in time.
Yeah, but also I mean, I also like hear and seen like people saying that they have a thesis or a strategy for following insiders, or like see them before people see them and just like copy trading. So I think that's also like fair game. It's just that that's not within my strengths. If people can do that like optimally, I think that's also like a cool thing to do. The game's a game. If you can trade it, like you should, I think.
Right. Certainly. The other big, related news piece from this week, I think, was the Spotify Wrapped market, where it kind of fell victim. I'm looking for, was it Loxy who had the really good? No, it wasn't. Let me find who tweeted the really good summary. But the same thing that happened to the Nobel Peace Prize market from earlier in the year happened with the Spotify Wrapped market, which is the source website uses WordPress. And I think when you either schedule a post or you upload draft media assets to WordPress, the directories themselves are public. They're not indexable. They're not obviously, so people have to crawl the site and find the actual URL string that then reveals it. But this happened with Spotify Wrapped this week. And so prediction market traders, fully, I think close to 24 hours before Spotify Wrapped came out, completely exploited the results for, top artist, second top artist, third top artist, all of these markets. And some people will say, well, this is insiders. The truth is, in that case, it is technically publicly available information. It's just an informational edge that these people have sniffed out. So I don't think that is necessarily foul play, but certainly it led to some dramatic moves in the Spotify Wrap markets.
Yeah, no, I think it's pretty cool. I think if people have an edge, they should use it, and people are gonna learn how to do it as well. Like it's crazy. Prediction markets are like economically incentivizing everything that exists. So people are just gonna start like having edges on things that we haven't even like thought about, and just like exploiting those.
Definitely. To take it back to some of the analysis that you've done. So you've looked at TSA flights, you've looked at measles cases, and I'm sure a few others that I'm missing within your tweet threads. Are there any markets that you're currently interested in analyzing, or maybe even markets that don't exist that you kind of wish did, that you could apply some of your like skills to?
You know what? I'm trying to like find a framework for more of these like pop and culture markets, just because I think they're gonna be like the biggest of the markets. Like people love those, and there's like so much liquidity and so much markets coming on and on and on. So I'm just trying to like think about a framework that I can apply to that. But that's where I am now. I don't have anything on paper right now.
That makes sense. Yeah. And those could be challenging too, because it's like, if you were to take a frequentist approach for those, there's going to be like new award shows or certain events that are taking place that you don't really have like prior data for. So it'd be very curious to see like the framework you come up with and like how you like think about trading those.
Yeah, for sure.
Well, thank you so much, Mr. Froster. We'll be glad to have you back on the show, especially as you continue to develop these models and find other interesting markets that can be modeled in this way. So thank you so much for stopping by.
Thank you, guys, and awesome job. Great to be here, and yeah, be glad to be back whenever.
Sweet. Thank you, Mr. Froster.
All right. Sounds good. Bye.
Awesome.
What do you think, Matt? Yeah. I can't help but dive right into the freaking Google search results, man, because it's what hosts a little bit. Although not entirely, not entirely. Like my full retro is still coming, I think, on this, but the outcome, let me pull it up really quickly for the year in search. This is 2024. The outcome for 2025 for trending people, the strikes that were offered, the outcomes that were actually offered by both Polymarket and Kalshi, well ahead of time, if you will, were Kendrick Lamar, Jimmy Kimmel was on there, Pope Leo the 14th was on there, and then let's see if I can go to the next 5. Zoran was on there, Bianca Sensori was on there. I don't remember if there was a strike for Greta Thunberg. There may have been, but quite a few of these names kind of never even showed up on the market. So I almost think my learning is, these markets where there's not complete information. In a presidential election or any election, there are candidates who have been approved to be on the ballot. And so you can have a market, a multi-outcome market with 10 different candidates, like the New York mayoral, and you at least know that is the complete set of outcomes. A market like this, or even a market like Spotify Wrapped, saying, who will be the third largest artist, relies really heavily on the editorial teams at these platforms to come up with options that, are likely to be the option. But there should always be a really big fat outcome, which is other, and that should probably be in your head, like, don't fall victim to this kind of framing bias of just seeing those names and just thinking that it can only be those names, because so many names that showed up on this report weren't given, even for some of the other markets, as possible outcomes.
Yeah, I'm surprised that other wasn't an option, just in general. It wasn't, right? Like for each of these markets?
I don't think that they offered other, which is so interesting that they didn't offer other, because it would have given us the ability to more accurately price it. One bit of nuance that I know happens is that for things like the New York mayoral, they have to put the market up, right? And they don't actually know who all the candidates will be. And so I think on kind of the back end, when they set it up, they, especially for Polymarket, because elements of this are on chain, the market itself has basically additional slots that are outcome strikes that are placeholders for them to then overwrite that with someone. And they'll have like a dozen of those empty slots. If they, if all of a sudden a dozen new people enter the New York mayoral race, they start to insert those names. Once they max it out, though, the way that the on-chain polymarket markets settle, the order book and the price is all kind of built off of this multi-outcome thing. So they're not able to just add an infinite number of additional options as the market evolves. But probably the better way to like approach this, if I'm Polymarket or Kalshi, would be to have just a moment in time where you offer a bunch of different outcomes, and then you have that other option, and you don't say that this is a living market with additional outcomes being added all the time, because it just leads to this kind of weird kind of confusion.
Definitely. We also got a comment from Akshay Anand saying, working right now, but wanted to pop in and thank y'all for the coverage of this market. The no on Trump was so free.
The no on Trump was absolutely free. We told people many times that the no on Trump was free. And still, when you scroll through the comments of the market, there's quite a few yes Trump holders who are somewhat furious by the fact that the methodology to settle this market was based on year-over-year growth. And the funniest bit, or maybe it's not funny, but the bit that I noticed this morning right away when looking at how this settled was that Google Trends themselves updated the website, both to have a really huge promotional card for the data methodology, right? Which previously was just this tiny little hyperlink in the bottom corner here. And then when you go into that, they added this line saying, if sharing this data, please refer to these lists as trending searches and do not use phrases like top searched or most searched. That would be inaccurate, which is absolutely subtweeting, almost not even subtweeting. It's, I think, directly calling out both Kalshi and Polymarket, who chose to title these markets most searched, and there's almost no reason for them to have not given it a more descriptive title, given that most searched is just highly misleading and led to just a ton of people buying yes on Trump without looking any deeper into how this market worked.
Yeah, no, it's you think after all the tweets and also our videos that people should watch, that they would have picked up on this, but
yeah. The thing that that's most sad to me, if you will, having had a strategy for trading this market, is that even when I kind of, now retroactively back test the David outcome using our proxy data source, which again was Wikipedia page views, and say, okay, year over year growth, the year of 2024, the year of 2025, was the spike in search queries for this person, or search queries implied by Wikipedia page views, was it so much greater than the Pope? And the answer is no. So even if I had known that David was a possible contender in this market, I think I still would have been betting on the Pope, simply because this was the methodology that I kind of chose to build a strategy for this for. And the year over year growth is huge for the Pope. The name Pope Leo XIV did not exist in 2024. And so there's, obviously very little, there would have been very few Google queries, just like there's very few.
I mean, even if it was his name, it would still be tiny. Like even if they did, yeah.
Whereas it's a higher baseline for David. And then the spike, around whatever news event happens in September for David is a significantly smaller spike. It's to a lower number of total page views than the Pope, which makes sense to me, the Pope being such a huge figure. So I don't know even if David had been listed as an option earlier if I would have gotten this right.
Yeah, and I think some of what we talked about too is that with David being a younger artist, a lot of more of a younger audience, that people who would search for them probably are clicking on TikTok and Instagram links or YouTube reactions to some of the news that was coming out, and not clicking on their Wikipedia page. But good lesson to learn for the next year that we do this. And I know that not hitting Pope Leo was a bummer, but I think you should share some of the ones that you did hit because of this.
Yeah, let's see if I can find our original thread on this. Give me one quick sec. Well, basically the strategy of using this proxy data and looking for year over year growth did work on the #1 actor market. And that is where we saw, let's see. Here's our original thread. So for folks who aren't already following us on Twitter, that's where we leak the alpha, or rather I should say where we leak how we're thinking about these markets, which is really all we ever want to do, is just take people along with how to approach prediction markets. So I shared here, the methodology, some insights around kind of how Google normalizes data for Google Trends and why Google Trends, wouldn't have been, an easy way to just kind of understand these markets. and then shared how I was using Wikipedia page views. And if you look at this graph for the options that were given as actors and actresses, Sydney Sweeney, who was leading the most searched actor market, had a huge amount of search volume in 2024. And so there's a very, very big baseline that Sydney Sweeney has to grow from in order to have year-over-year growth. Mikey Madison? I should really know this because I just made a nice chunk of changes on her outcome. Mikey Madison, who's the lead actor from Nora, had a huge spike and was previously unknown. I think the spike came when the film Nora won an Oscar or another award. Or I think she won for Best Actress. And so I was pretty high conviction that Sydney Sweeney would be a no, and that Mikey Madison, just the amount of growth in queries for Mikey Madison made me think that she would be a yes. If I was doing this all over again, though, I actually, taking into account the fact that the strikes listed on the prediction markets are not the complete set, I would just make no bets. You know what I mean? Like, so here I'm buying the Pope, and here I'm buying Mikey Madison. I should have just been saying no on Trump, no on Sydney Sweeney, because then I can be very confident. I know from looking at the data that there's at least one person who has had greater growth than these actors, but I don't know what I don't know. And so I should have been a little more disciplined in just making no's against this.
This is how you become nothing ever happens pilled. This is
right.
You just slam the no on everything.
Right. Yeah. But because, implicit in the no is the yes on the other. You know what I mean? Like you're kind of inherently buying the yes on other.
Definitely. Well, hey, either way, you put in the work. I was really excited when you shared that you found a proxy and found Wikipedia data. I'm like, this is a genius way of doing it. And, it didn't pay off for the Pope one, but it did pay off for the actor. And I think that's a lot of learnings we could take into future markets.
Yeah.
Definitely.
Should we run? Some of our hot takes, our quick takes.
Sweet. Let's do it.
So did you
run through the list?
I don't know if I sent you this.
No, what is this? Oh, yes.
Oh, in the segment. Yeah, did you read the email?
I did read the email.
So Shane wrote, the Forbes cover piece mentions how I was emailing the SEC as a kid. Here it is, October 2013. Little did I know, what people call an overnight success takes a decade and still a long way to go. And so this is the email Shane sent when he was probably I think he was 16 years old or something.
Yeah, he was in high school. He was a sophomore in high school, younger probably.
Dear SEC New York Regional Office, my name is Shane Copeland. I'm a high school sophomore, there you go, here in Manhattan. I am creating an ECN-based stock exchange, and my first line of task is to make sure my idea is totally legal and can comply with SEC regulations. I was on the phone with a representative of yours, yada, yada, fast forward. And I think this is for a different idea than for, he was just looking, I think Shane was just a early markets nerd and wanted to set up an exchange for something.
Yeah.
Or it's
last
possible.
Sentence is funny. Although I'm young and this come across as very naive, capital N, I do believe I can comply with SEC regulations. This could possibly be something special. Possibly.
What a banger of an email to be able to look back on.
That's great.
Yeah.
Love it. All right, what we got next?
I was going to bring this up in our conversation with Dustin, but we'll save it for next time. Were there any of these you wanted to talk about?
Here, we could pull up. There's a few of those that we went through.
There was this. The Brian Johnson response. I didn't even watch this video.
Of this trend of.
Sorry, let's watch this.
All right.
Do you worry about manipulation? I mean, that's the other big part of it. And by the way, you effectively manipulated the outcome.
Yeah, well, I didn't trade on it, of course, but I actually had a really interesting conversation with one of the folks that was nominated to be CFTC commissioner about this, and he asked me. He said, "Do you think we should allow insider trading in prediction markets?" And I said, "It's actually it's not as clear-cut question, right? Because if your goal is to actually, for the 99% of people trying to get signal about what's going to happen in the world, like is the Suez Canal going to be reopened or whatever, you actually want insider trading. You want, some admiral sitting on a ship in the Suez Canal who has really good information to be trading, so you get better, higher quality signal out of them, right? Now, if you want to preserve the integrity of those markets, maybe you don't want insider trading, right? So there might be like a decentralization test that has to go in here, but it's not a clear-cut answer. Of this trend of.
So I mean, yeah, it does sound like Brian Armstrong watched our episode, the OG insider trading and prediction market debate hosted on Free Markets. I think it's episode 4 or 5 for those digging through the YouTube archives. But he's making, both the pro and anti case, right, for insider trading.
Yeah. I'm very surprised that he responded in that way. I could have sworn. I mean, I would have expected like a nothing burger response, because it's kind of tough for you to run like an exchange, a cryptocurrency exchange, at least for him in particular, and then be like, I don't know, maybe it's like fine for these kinds of things to do insider trading. But I'm glad he was honest.
He's not saying that in the context of a crypto exchange, right?
No, but in general, just like things relating to the finance and trading, because I mean, eventually Coinbase is probably going to have their own like prediction market thing. I think Dustin earlier on the call was mentioning that. So like, yeah, it's kind of a spicy take.
It sounds like I'm looking for the Coinbase announcement here.
Also, if you want, I could share my window for some of the tweets that I definitely want to go through.
Yeah. Show me what you got.
All right, let's do it.
Coinbase is teasing a product announcement on, I believe it is December 17th.
Yeah.
So the speculation is that them announcing their prediction market. If that happens, then things are getting really wild, because now you have Coinbase launching a prediction market, Robinhood building their own book and launching their own prediction market, the two OG players, Kalshi and Polymarket, the long tail of all of the other players. I mean, things just get really crazy, I think, if Coinbase...
Liquidity, fragmentation in action. But yeah, I'm very curious to see. First one, this is a quick one to go through because Dustin was just talking about this. I very much agree with the UX UI of like prediction markets. This is much more familiar to sports bettors. This is what the Fanatics markets looks like, and it's now on the App Store, where we actually could see spreads, winners, totals. This is typically what a sports book looks like.
Interesting, right?
Yeah. Next one.
Let me respond to that.
Oh yeah.
I think the challenge, I mean, I heard Dustin say that earlier too. I think the challenge with that statement is the challenge that any UX designer has on any product, which always comes up, which is, are you designing for net new users, or are you designing for your existing user base? And usually your existing user base has learned a pattern. Like, he uses the word familiar in that tweet, which is a very good word. You have a whole base of people who have a conventional UI pattern that they've learned, and it may or may not have been intuitive to them when they first encountered it, but it's muscle memory for them now. Then you have, or you might have, a design that works better for a net new person who doesn't have any kind of preconceived notion of how a thing should work, or a conceptual model in the back of their head of how a system works. And this is always, I just think this is a very hard thing to get right. I don't love, obviously, the Polymarket and Kalshi thing. I understand that it's not resonating with people who are coming from traditional sports books. Is that a bigger market than like what would be net new sports traders? I don't know. I just think that there's some nuance there.
No,
right?
For sure. That's a very good take. Also, Alcom Alpha asks, is it only in the US? I'm not sure. I don't know if Fanatics Markets is only in the US or elsewhere, but it seems to be in the App Store. So it's something we could check out. Alrighty, next one. QT Cinderella, who is a Twitch streamer, reveals that she's suing Polymarket. I think it's just a cease and desist. I don't know if it's the same, if you call that suing as well. But for putting streamer award props on their website after a viewer accused her of insider trading. So the streamer awards is something that's hosted by this streamer, QT Cinderella, a big streamer on Twitch. And it's an annual award ceremony where they give out their awards to, like, best streamer of the year, best gaming, yada yada. There is markets for this on Polymarket, and QT Cinderella has a little bit of a clip here. I won't play all of it, but it's just her saying, like, I have nothing to do with this.
Oh, we don't have your tab.
Oh, we don't have audio. Oh, it's fine.
Interesting. So yeah, the editorial board basically straight up put up a market that's related to an awards competition that she invented. That's a little tough. So
she's just like, I don't want this. I don't like this. I have nothing to do with this. I sent a cease and desist. I want this taken down. So we'll see how that goes. We'll stay tuned for that. Any quick thoughts on that before I switch to the next one?
Here's a quick thought. Polymarket has a program, I think, whereby creators can sponsor markets. So you sometimes encounter a market and it says, it was set up by the one that I see all the time is some finance blog, I think. So they should lean into that. Like, if creators want to have markets around, either a market they came up with or around something they're doing or something they're involved in, then it should have the creator's name on it, if you will, and they should endorse it explicitly.
For sure. Unfortunately, I do think that in the gaming sphere, as someone who plays a lot of video games myself and is in those spaces, they are usually not very receptive to these kinds of things, especially crypto, prediction markets. Like, these are not going to be, I doubt these will be adopted, but that's a really, yeah, I definitely, if they were to do it, that sounds like it makes sense.
Wait, also, for anyone at Polymarket who is watching, 3 markets would love to be added to the creators markets.
Oh my God, yeah, we'd have so many markets to come up with. Like, actually,
yeah, that'd be great, and we could certainly crowdsource some. So
yeah, definitely.
You guys know how to reach us.
This one's a quick one because I think we've talked about it. Polymarket US is now being rolled out to those on the wait list, primarily sports at the beginning, from my understanding. Any takes there?
Why primarily sports?
I think they're starting with sports, probably for adoption. I have no idea, but I think that's what it's starting off with. And someone correct me if I'm wrong. If that's yeah, someone's in one of the smoothest and cleanest UI for any mobile app I've used. I disagree. I don't think this is clean at all.
I wouldn't be shocked if the mobile app is really good though. Like, I don't think there is a native. Is there a native iOS app for folks not in the US right now? I don't think so. I think it's
I'm not sure. And also, I know we have a Polymarket tag, but this is just constructive criticism. So, yeah.
Right.
Hey, catching late like usual. Hope you're both having a good night. Thank you. Appreciate it.
The thing that I noticed about the Kalshi mobile app is their animations are just sluggishly slow. Like, just wipe out the animations. You know, and I don't know. The easing time on their animations is like a full half a second. It feels like it probably isn't actually, but it just makes the thing feel very sluggish. So
no, for sure. Maybe they need a top tier designer. I think you and I both know a guy. So,
or it's possible that it's like a progressive web app or something. Like, if the app feels a little slow, you want to be like moving very quickly. So I wouldn't be shocked if the Polymarket app felt a lot better, but we shall see.
Definitely. Next up, this person tweeted, "Go home, prediction markets, you're drunk." It seems that there was a research paper that came out around prediction markets and their true accuracy on predicting these events. I haven't actually read the paper myself, but maybe we do a paper reading at sometime together and share our thoughts with the group. But I think the early reactions that we have, just you mentioned that some folks have called out that the methodology is a bit suspect.
Yeah, the call out that I saw in response, like I was immediately, when this came across my feed, I was like, okay, this looks interesting. You know, somebody is trying to assess the predictive accuracy of prediction markets, and in particular of real money prediction markets, I think, versus maybe some of the ones that don't, or something. I mean, there was some comparison of predicted to Polymarket, etc. I guess predicted is also real money. But what somebody called out was like, there were 2 criticisms I saw, and we would have to read the paper to make sure this is what's happening. This one that we're looking at now from Semi, if you just zoom in on that, is that the largest category of markets included in the data set for this study that found that the predictive accuracy of Polymarket is not all that, was mention markets. It was the political speech markets. So will Trump say this for this rally? Will Trump say that tomorrow? Mention markets are a whole category of their own, and I would not consider them to be a political, predictive market. Like, mention markets are, mention markets. So to judge the accuracy of predicting election outcomes from a prediction market platform on the accuracy of their mention markets for politicians, it just feels totally unfair.
Yeah, definitely. And I'm excited to actually read through this. I love me a good research paper and seeing what's going on here. But if that is the case, if that is their methodology, then there's a lot to be improved on there. And who knows, maybe we can mimic their methodology and actually, clean up what markets are being targeted for it.
Yeah, there's a big question, I think, for anyone who wants to assess the accuracy of prediction markets at being predictive instruments, which is at what point before settlement are you sampling from the market? Like, the odds are moving around like this. Are you sampling 4 hours before it's settled? Are you sampling if you sample right when it's settled, it's typically settled to 100%. It would make more sense to me to go like a week ahead of an event, or at what point ahead of an event is it the most accurate?
I'd also love to see by category too. By category, a month out, politics is gonna be different than entertainment. Very interesting to see.
Totally.
Quick one. Kalshi raising $1 billion at an $11 billion valuation. I think we talked about that a little bit in the stream earlier today. Decacorn.
I haven't watched the video. Can we watch a second of the video?
Sure. Yeah. I don't have audio, but why don't I have audio?
It's because you're sharing full window, I think. But yeah, I mean, congrats to Kalshi. Like, this is huge. You know, it is a big fundraise.
Yeah.
So, you know,
For sure. I don't know why I can't pull it back up, but I'm going to share the window again. But big fundraise. Congrats. Something change the world.
right.
Yeah.
Something Truth Engine.
Okay, this one. 24 hours ago, Drake had a 96% chance to be the number 3 global Spotify artist. 24 hours later, with no new information, The Weeknd has taken the lead. By the way, this is from Pride M Trader, one of the favorites to follow if you haven't been following. Most of the price action appears to be coming from one person, leading many to wonder, what do they know? This is now the most contested Spotify Wrapped market to watch come the data release this week. So TLDR, Drake was leading as the number 3 Spotify artist this year. And that flipped. The Weeknd ended up taking the lead there. Any thoughts here on Spotify Wrapped? Actually, I'm curious to hear. Maybe you should share. Who's your top artist for Spotify Wrapped? Do you use Spotify?
It's John Bellion.
John Bellion. Okay.
Smaller artist. I use Spotify. I'll send you a straight up screenshot of this. My listening age. You know, they did listening.
Oh,
age.
yeah.
My listening age. I'll just show you, bro.
Yeah, I'm 55.
Great. Are you 55?
Yeah.
Damn, you're an old man, dude. You're a old man in the Wrapped world. Wait, I have to freaking replay my whole Wrapped. One sec.
There's like a section you could drive for that. But yeah, while you find that, a lot of people are really
90, bro. It's straight up 90.
That's the highest I've ever seen.
LMAO. I laughed out loud. Yeah, it's great.
That's really. I've never seen anyone that high. I've only seen like 70s. Like, that's crazy.
Great. Yeah. For this market, though, I mean, we talked a little bit with Mr. Foxter about the fact that there was, I don't know if you call it a leak or if you call it an informational edge, but people sniffed out the results of Spotify's charts about a day or two in advance of the data becoming public. They did this by crawling the newsroom.spotify.com until they found media assets, that included the final numbers for different artists that had been uploaded to WordPress in preparation for the official launch. There's a whole story there, right? I mean, I think that kind of thing is fascinating. The fact that Drake, had been leading over the weekend, and the weekend then flipped him, has something to do, I think, with bots, with botted listens being filtered out. Right.
Possibly. I think that's the current hypothesis and consensus. But yeah, not to completely derail, but we got a comment saying, "Hi, I hope the Google Trend scam didn't affect much."
Yeah, no, I mean, we're shutting down the pod, obviously, but other than that, I'm selling all my personal belongings and moving into a vehicle. No,
this episode we're broke.
Scoot the stream back probably 25, 30 minutes when we wrap, and we kind of just did a little bit of a post-mortem on it.
Sweet. Next one, last one that I have. LLMs are climbing the wrong hills. Excuse me, sorry, I'm a little stuffy. So Alpha Arena, which we talked about, I think in the last stream, is an arena where language models can compete against each other in trading. There's also a prediction market equivalent of this. But the reason why I wanted to call out this tweet is it's a long form post around how you can actually train and fine tune language models to be better at, trading. And one of the things that they called out here is we have all these benchmarks for coding. We have benchmarks for multilingual reasoning and a few other things. But what we don't have is, what if this is actually the better benchmark to have, is to have a language model operate under uncertainty? The context for this is around stock trading, but you could say the same thing for prediction markets. And it just got me thinking it'd be really cool if we fine tune our own models here on the pod, or did some prompt engineering to see what it would look like to have a language model trade for us. It's really hard to focus on all these markets because there's so many of them. You only have so much time in the day. Why not unleash a little robot there? But I'm curious to hear your thoughts on it, Josiah.
I think my take would be that there's a lot of commentary right now of if AI takes everyone's jobs, or certainly information workers' jobs, what then do we do? And I almost think that, especially some of the markets we've looked at, some of the nuance in how they resolve, some of the extenuating circumstances, a prediction market traders should have observed that there was some drama around botted Spotify listens. They should have then, there should have been some distribution in your head for the likelihood that Spotify adjusts the public numbers based on bots. And then, there was public information about, Drake's record label or whatever being wrapped up in some of the botted listens things, which is all to say, it feels like a black swan event that, all of a sudden, Drake is pulled from the number 3 slot, even though publicly available data would imply that he would be number 3 because of, this extenuating event of like, we're going to filter out botted listens. But that's part of the game. Like that's part of trading in these markets. And that feels like the kind of thing an AI can't do super well. It feels very uniquely human to be able to take all the nuance together. I think it'll be a very long time before, an AI can excel at this the way a human can, to observe, what's happening with all of the Google Trends things, or what are the extenuating circumstances around the TSA passenger travel, and will Zelensky wear a suit? Like there's a lot of soft knowledge that has to kind of be crystallized. And I don't know, it feels like we have the edge there. And so it'd be cool for it to be a benchmark. Like maybe this is really humanity's last exam, right? Is how good is it at predicting? But it also feels like we finally, or maybe not finally, but we now have this thing that humans can compete at that is not a solved game, right? Like, okay, the computers have us at, you're muted by the way, Matt. The computers have us at chess. They have us at AlphaGo. I think we're very close to them having us at poker. You would know. Do they have us at poker? They might have us at poker.
I think it like heads up. It's pretty decent, but not like a full ring game now.
Will they be better than the best prediction market traders? I go back to Domer observing that Pence had a 1-syllable name and that Trump has a sort of affinity for marketing and had previously selected a vice presidential candidate with a 1-syllable name, and him building that into his mental model and using that for predictive edge and predicting that JD Vance would be selected in 2020 as Trump's running mate is like, good luck to the LLMs.
It's
right?
impressive. Yeah. Maybe Grok could do it. No, I'm just kidding. But no, totally get it. Any other topics that you got?
Well, can we check on that? Can we check on the prediction market AI trade?
Oh yeah, let's do that. Let's do that.
Matt last week, a experiment someone has set up, I think it's called N of 1, where they basically, given API access to all of the different leading LLMs. Grok is in there. I think Quen is maybe in there. Certainly Claude is in there. ChatGPT is in there. Gemini is in there, and has them trading in real prediction markets, a portfolio, if you will. And it's a competition, over time to see how these things do. I think when we looked at this last week, they were almost all losing abysmally. They were all in the red.
Yeah. And also the N of 1, that's the one that's trading on actual like stock market stuff. This is by Semantic Layer, and it's called the 42 Profit Arena. So let me share my screen with this here. Oh, also share system audio so you can hear some of the chill vibe music that goes on here. You can hear me clicking around.
Yeah.
Oh yeah, they're all bad. DeepSeek's down 10%. That's the best performing model right now. Gemini is just yeeting their money.
Let's look at Gemini's trades.
Will DraftKings launch prediction market in 2025? Yes. Good trade. Down.
Well, wait a minute. I don't think they've launched. We talked about that market.
They've not launched, I don't think. But they have a yes. This bot has a yes position on it. It sounds like if you counter trade these models, you might actually be in a good space.
Yeah, no joke. What's their other big one? No change for Fed interest rates after January 2026 meeting. So that's not the cut this month. That's the next cut. And they're saying no cut.
Yeah.
Wasn't there a way to look at the LLM's reasoning for the trades that they were
doing?
Doing?
Right here on the right-hand side. So we could see GPT, no change in the Fed interest rate after they bought. So ChatGPT is the counterparty to Gemini here. Let's see its reasoning.
They're trading against each other. That's so
funny.
It's okay. I think I said this when we looked at this experiment last week, but like we literally live in like a Black Mirror episode. Okay. There are 5, somewhat generally intelligent AIs trading in prediction markets. Like both these things are so new. It's just a wild time.
Yeah, it's nuts. I think they were each given $10,000 and they are burning it. So what you can do if you want to earn some beer money maybe not financial advice, but check out what they're trading here and just trade against them.
Just kind of trade them. Yeah, maybe.
You can
Look,
destroy
okay,
the
one of them
project.
traded. Okay, Grok traded no for Will Bianca's and Story ranking Google's top most searched people of 2025.
Oh, we need to see this.
The market will rank implies 67% probability. This seems significantly overpriced.
You know, Grok might actually have some insight on this, given that I think they are trained on X data, right?
Right. You would think that Grok would actually outperform, given that it has access to X. But okay, I think we actually looked at this last week. Like, it hasn't looked at the resolution criteria. Like, it hasn't done what we've done, which is to go to the resolution criteria, understand it, and then look at the data methodology on the Google website and make the observation that the title is misleading. It hasn't even done that.
Yeah.
So yeah, I don't know. Good luck to the LLMs.
Well, sweet. How are we feeling?
Good. Shall we wrap it there?
Let's do it. And for those who are just tuning in or tune in a little bit later, just a recap for the day. Today, we chatted with Dustin Gouker, who is a journalist and writer for sports betting and prediction market newsletters, both The Closing Line and Event Horizon. And we also chatted with a trader on prediction market Twitter named Mr. Frogster, who talked about some of their approaches on the markets that they won some money on, which is TSA traveler numbers, and now Measles cases. I think a few other ones as well. You should check out their Twitter account as well. And then we wrapped it up looking at some tweets. And I think this might be the longest live stream that we've done. So I think both you and I are probably running on fumes. I know I am. I'm actually like coming off from a sickness, so I'm really stuffy. And once I hang up this call, I'm gonna, take all the medicine that I can to get better.
Okay, well, we'll be back next week, same time, same place. Smash the subscribe button there, and drop some comments if folks have markets they want us to look at or guests that they want us to bring on. We're early to this thing, so very open to feedback.
Yeah, definitely. Thank you, everyone. Thank you, Josiah.